Is buy to let dead? With so much going on in the market right now, I'm going to be showing you what's happening, but why it's happening, and more importantly, how you can do the same. There's so much happening right now with tariffs in America, the economic demand, the fluctuations in the pound. What does it even mean? I really want to share how you can actually utilize this data. So let's break down some of the stats that I've been researching right now, but more importantly, I want to share how it got there. And by the way, you can use this to help you build a hands-free portfolio that requires far less time input in the current environment. Let's get straight into it. So what exactly is happening in the UK property market right now? Well, prices are actually holding pretty bloody steady. They're up for about 3.9% year on year nationally. But interestingly, in areas that we've selected, in Leeds, for example, terrace houses are up around 6.7%, and even flats, which I'm not a fan of personally, are seeing solid growth of 3.6%. But we are beating the national average in our areas by about 55%. Not that that makes me an expert, but we seem to do that year on year. And we're seeing a big shift right now in mentality from back to that urban living. So since COVID, a lot of people wanted to move out to the countryside. Demand in city suburbs actually dropped, but we've been investing in these suburbs such as Burley, Horsforth, Woodhouse, areas of Sheffield, Castleford, Wakefield, Huddersfield, Halifax, etc., where people are looking to get that city centre access with some space to go along with it. And we've seen massive results from our actions. Mortgage rates are starting to come down, still higher than we've experienced. Obviously, we experienced 0 point fuck all for about 5 years, so you can't go much lower than that. But we've seen these drops. In short, it's not a boom, it's the calm before the storm. And it's this calm that we need to be utilizing. But let me break down why it's even happening. Let me break down what's happening in the world and what you should be doing to take advantage of it. First of all, US trade tariffs. I know. Why is Trump, the man across the pond, actually making a difference to little old us? Well, actually, the world works economically on a macro sense. So what does that even mean? That's a lot of random words. Basically, he wakes up one day and goes, do you know what? I want more jobs in the US. And so I'm going to make it more expensive for places outside of the US to send their product to us. And the idea is to encourage businesses in the US to hire US nationals. When in theory, that's great. In reality, it doesn't really quite work like that. But I'm sure Trump knows what he's doing. Sure he does. So it was tariffs across the world, then it was just China, then it was 10% to the UK. And essentially what this does is it reduces consumer confidence. And we have a measure across the world of consumer confidence, which is how confident am I spending money in our economy is the gist of it. And consumer confidence has gone down in the UK, directly correlating to these changes. Great, what does that mean? Well, if people spend less in the country, inflation goes down. Inflation is essentially when demand is higher than supply and prices go up. A bit of inflation's good. If inflation goes too low, we need to incentivize the economy. If it goes too high, we need to slow down the economy. So what happened post-COVID? Things exploded. Interest rates went up, trying to slow everything down, and it started to work, and that's why interest rates have started to come down. And so what is the outcome of that? Well, the Bank of England response goes, the economy's going to slow if we don't do anything. We need to incentivize people to spend money, borrow money, not look to save. We need to incentivize businesses to take on debt to scale up. We're going to reduce our interest rates. And so you are going to see over 2025 an expedited, the interest rates were coming down anyway, but now it's going to happen faster and you can have even more confidence in that happening. Number two, a resurgence in prime London security and property. So what does this mean? Because of what happened with Russia and Ukraine and us blocking Russia from being involved in London, etc., London property prices ended up reducing. And the reason for this, by the way, is it's kind of like going to a lake and then when you drop a really big rock in it, and you kind of wonder why these little grains are washing up on the shore. And it's because of that one big rock. It's the ripple effect. And so a lot of the prime central London, I mean like the luxury areas like Kensington, Chelsea, etc. Yes, you've got some super rich London-based individuals that can afford that, but a lot of it was the Russian money, the Chinese money, etc., 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 all ploughing in. Well, what happened is actually there was a bit of a scare when Russia went out because it was a huge portion of it. And then what that did is reduce prices here. which then reduce prices here, which then reduces prices here because the demand goes like that. And what we've seen is actually there's a resurgence. So right now, this was interesting. In Q1 2025, 6.9% of prime central London real estate was from external investors, namely from the US. And a lot of that links in with a weakened pound going around this. So when the pound versus other currencies is a bit weak, it means that they need to put in less of their currency to buy the same thing. Make sense? So if it's called pegged against the dollar, if the currency is pegged against the dollar, they can buy more. What does that mean? More money goes like that. That gets too expensive for these people, so they start buying there. And then the people that could buy there, buy there. And so it ripples out. And so really good confidence means we're likely to see a pump up in the London market, and what this leads to is a pump up in our market as well. Number 4, immigration. And immigration, by the way, is a really good thing for a country. I know some people don't like it, some people love it. This isn't the channel to really discuss that. Too much of even what I would perceive as a good thing becomes a bad thing. Immigration in general can be really good. You know, when we're getting talent from around the world, that's really powerful for the economy. But also from a holistic point of view, if somebody's not having a great time in their country and we're able to protect them, I think that's an amazing thing to do personally. Now, the challenge is too much of that actually puts strain on our infrastructure. And the UK is still trying to bounce back from the lockdown in 2020 due to COVID, right? And just so you've got an idea, immigration was at about 550,000 about 4 years ago. It's now doubled to over 1.2 million. Now, again, I'm not here to have a political view on this, but it doesn't take a genius with the fact that we've not kept up with building anyway. We're around 4.75 million as a figure behind where we should do based on what the politicians said that we would get these built and everything like that. In real numbers, we're way over 1 million in housing shortage anyway. And then with immigration, it puts that extra strain on it. Now, what does that mean? Well, what it means is the waiting list for social housing has grown. It's currently 1.3 million waiting list for social housing in the UK. Obviously, properties, there's a massive waiting list. Immigration, if they do it in the right way or sometimes the wrong way, the UK government is very much a look after people approach, rightly or wrongly. And so there's a lot of the government resources and funding and infrastructure getting allocated to this. And again, I'm really not having a view on the political point of view. Ultimately, I think it's for a reason. But the financial strain is very real. What does this mean? It means supply is getting there and demand. So if this is where we needed to be and this is where the market was, supply isn't anywhere near what we need. We need more properties. And the demand across the board is staggeringly high. What this means, property prices going up aggressively. On top of that, we've got renters reform stuff, Section 21, Section 8, all of these things. And what this is causing is a lot of the older school landlords to go, there you go, I'm done. I've made my millions in property or tens of million. I'll sell it off now, retire, chill for the rest of my life. And the problem is, that means less property for renters. And so all of these different compliance issues that the government's putting in place, I imagine to protect renters, actually fucks them over. And that is one thing I really want to give them a smack around the face for. It's just like, sort your shit out. So it's putting this pressure on landlords, especially the older landlords that had a bit of an easier life than new age landlords with regards to regulation. They go, done. And then when that exits the market, do you think the renters can suddenly buy properties? No. And so what do you think happens to rents? It shoots up. It's crazy. And let me just talk to you about the final thing on supply and demand, because this isn't just a rant. It's actually really exciting. I'm going to read some out from here, so apologies if I'm looking away. So new housing right now is at a 16-year low, because of all of the things that I've mentioned. We have a labour shortage of over 20%. We're 20% lower in UK labour force, so the builders, etc., that are actually going to make these homes since 2008. Construction cost is up 20% since 2020. The UK housing deficit is closer to 2 million than it is 1 million, and the social housing waiting list is 1.3 million. Doesn't paint a pretty picture, right? And what does this end up leading to? Well, it ends up leading to unsustainable prices. And so for the everyday person, this is not good. And I don't want to sound like an ambulance chaser here, but for us as investors, it creates what I call the window of opportunity. I like to call this period the calm before the storm. There's fewer bidding wars right now. We've got negotiation power, which means we've got access to areas that we didn't before. And we're making sure that we're prioritizing cash flowing properties. So we want to make sure that we're focusing on the highest capital growth areas. The problem with that is there's so much demand for it. It's hard to get ones that positively cash flow, but we make sure we do that. All right. So we're setting up in the right structures. Over 400,000 landlords now have set up in limited companies, which is the way to do it. It's becoming the norm. And we really want to be focusing on those limited companies building up housing stock in strong capital growth areas. We focus on 2 to 4 bed freehold houses, semi-detached and terrace, boring vanilla buy-to-let properties around major towns. And we focus on Yorkshire, specifically West and South Yorkshire. And these types of deals are working really well right now. So the reason why I share these market updates is so that people can take action on it. I mean, most of the stuff that I've mentioned, you may have already known a little bit about, or some of it you're like, I have no idea. But ultimately what this creates is a window of opportunity. And what people wait for is the announcement of growth going into the news articles. And that's stupid because by the time the news are announcing it, it's already too late. And by the way, I have got over 1,000 properties worth of experience over the last decade, over 100 of which are in my personal portfolio, increasing in value of an average of 60% over a 5-year basis. And so when I'm saying this is the window of opportunity, I mean it. We are aiming to invest in over £10 million of property, ideally over the next 6 months, and we are going all in. And the reason I say this is join me. The benefit of me going so aggressive on these properties is I'm having to spend a lot of money. And by the way, what I mean is I'm spending between £30,000 and £40,000 every single month getting direct to vendor, because ultimately I want to take advantage of this opportunity. And if you're ready to take advantage of the fact that I'm going to have too many deals that I can facilitate at any one point, here's where you come in. What we do at Aspire Portfolio is we build portfolios for people. Shock horror, right? We focus on boring vanilla buy-to-lets, and we work with people just like you. In fact, I am Aspire's biggest client. So if you've got 100K or more to invest, but you don't have the time or the knowledge to know what is a great property, what is a great area, or maybe you do, but you don't have the time to be birding the phones every single day. My average team member makes between 50 and 100 offers every single week, and we have 4 of them dialing out to get the best properties that are available in the UK. And if you want to do that hands-free, we'll source it, negotiate it, get it through legals, use our finance team, we'll use our refurb team, and we'll manage it so you can build a portfolio hands-free. Then this is for you. If you're ready to take action, I've put a link in the description. Click on there, fill in your details, and I'm going to open up some free one-to-one strategy sessions. And on this strategy session, you're going to get one-to-one guidance and advice from my senior strategist on how you can utilize this window of opportunity in 2025. And if we can help you utilize this and scale up, then that'll be amazing. And if not, you've got your strategy session to take away. But this is for you if you're fed up of waiting around, you've been looking for the opportunity, and you've got the money to take the action. This is for you to build your portfolio. So click the link, fill in your details, and book in your free one-to-one session. They are limited on a first come, first served basis. So it's only for those people that are serious. And this is me going all in. I'm going to be giving you updates on what I'm buying, how all in I'm going. I'm going to be doing more and more properties on this channel so you can see how it works and how much money we actually make. It's allowed me to become a Deca millionaire, and I want to help you do the same. Click the link, book in your call. If you got value from this video, let me know in the comments. Hit subscribe and the notification bell, and I'll see you in the next video.